I think someone got to Trump and told him that this was happening. And he came up with the ruse of calling it tariffs. And all of the metal came back. See, when Western banks short on COMEX paper, which drives down the price, the COMEX sets the price. They will, on their books, they'll buy a long contract in London so that their books are balanced. But when no one's ever standing for delivery, that's fine. And metal can go back and forth, and it always has. They've done this in coordinated fashion. But there are people out there that believe that Trump believes that the European aristocrats and the Bank of England largely were responsible for election interference, were responsible for the color revolution. This is Tom Luongo's theory, and that he's trying to get back at them by draining the LBMA, blowing it up in essence, where I think these European banks will be on the hook for it. And it's not just bullion that these banks have, it's everything, and it would blow them up. That's why we've been in backwardation for the last 3 weeks. It's now kind of normalized, but it seems to be happening again. All of a sudden, there was a bunch of metal that fled into London to plug the hole. But how long can that last for? Because in London, they have, and this is how they do it, they sell paper. The banks that work on behalf of the government have enough money to overwhelm all of the trades. And so they know where all the pain points are. They know where the options are. They know where the resistance levels are, the moving averages. So they sell with unlimited amounts of paper until the funds or the longs capitulates. And then they just swoop in, cover their shorts by driving the price down. And in London, as an example right now, there are outstanding contracts that amount to about 2 billion ounces of deliverable contracts that could stand for delivery against a float. Those are the bars backing it, of about 150 million ounces. They're trading 600 million ounces a day, and they only have 150 million ounces of paper. No one ever stood for delivery, ever, but now they are. And it started in 2020. I started screaming about the COMEX and the LBMA are being bled dry. I talked about how 40 countries brought their gold back from the Bank of England and the New York Fed, which forever gave them access to COMEX and the LBMA. Everyone was repatriating and slowly gobbling up. The reason people can't see this is because we live in a society where instant gratification isn't fast enough. And I said, this is something you cannot go like that. You'll blow up the whole system, and it will only hurt you, whoever you is accumulating it. China, Russia, Saudi Arabia, India. And I've been screaming that forever, right? And China, the largest producer of gold in the world and second largest of silver, is flying all around the world buying doré concentrate, paying double what the West will and shipping it back so no one knows how much they have. And then they stand for delivery on the LBMA and COMEX quietly. Not too much. Don't rattle the bushes. Just keep siphoning it away, because there is a delivery mechanism. During my career for 35 years, less than 1% of contracts stood for delivery. Now we're seeing massive amounts.
Here's the key distinction. While banks and institutions may flood the market with paper contracts, they're not always moving the physical metal. In London, for instance, the number of registered deliverable futures often vastly exceeds the amount of actual gold bars available. That imbalance means the system relies on rollovers and financial settlements, not real delivery. When you're short paper in a tight physical market, you're betting that others won't ask for the metal. But if more holders demand delivery, the whole structure starts to strain. That's when the scarcity becomes visible through backwardation, exposing just how fragile paper dominance in the precious metals market truly is.
Very shortly after that, week or two, he was gone. And they say it was natural causes, whatever.
Bullshit.
And maybe it was, maybe it wasn't. But what I am saying, so this has been a game that has been played at the ultra high levels. But for most of our lives, Sarah, these countries like China and India and Russia, less Saudi Arabia because of our alliance, which is now fractured. But all of these countries were not coordinated, motivated, sophisticated. They were borderline quasi-third world. And now they're the opposite: wealthy, sophisticated, motivated, coordinated. And they say, we see what you've been doing with silver to rule the world with your military-industrial complex and the copious amount of silver it takes to create and manufacture high-tech weaponry. We see what you've done with gold by suppressing it because you went on a 30-year run of suppressed interest rates. And if you have really low interest rates, Gibson's paradox says gold should go to the moon. It is the canary in the gold mine. So they stepped on both for different reasons. And if no one stands for delivery, if you just paper settle everything or roll the contracts over, use it as a casino, as speculation, or accept money instead of the real thing, which everyone did, great. The game goes on forever. When you build a system on paper promises, you can do that. That's Bernie Madoff. And what happens is the first client for Bernie Madoff says, I need my $40 million back. Okay, here you go. And then it starts to snowball. I need mine back. I need mine back. And then they see that it's becoming difficult to get the money back. And it really aha, we got you. And so I think someone got to Trump and told him that this was happening. And he came up with the ruse of calling it tariffs. And all of the metal came back. See, when Western banks short on COMEX paper, which drives down the price, the COMEX sets the price. They will, on their books, they'll buy a long contract in London so that their books are balanced. But when no one's ever standing for delivery, that's fine. And metal can go back and forth, and it always has. They've done this in coordinated fashion. But there are people out there that believe that Trump believes that the European aristocrats and the Bank of England largely were responsible for election interference, were responsible for the color revolution. This is Tom Luongo's theory, and that he's trying to get back at them by draining the LBMA, blowing it up in essence. Where
I think go ahead, finish your thought.
These European banks will be on the hook for it, and it's not just bullion that these banks have; it's everything, and it would blow them up.
Another quiet chapter is unfolding in this story. Major nations are steadily repatriating their gold, pulling reserves out of Western vaults, and tightening the pool of available metal in the global system. Meanwhile, emerging powers like China, India, Russia, and Saudi Arabia are building vast hoards of gold and silver, often moving shipments quietly beyond traditional reporting networks. This discrete accumulation is draining the supply that Western markets rely on for leasing and delivery. As the world pivots toward de-risking and mineral sovereignty, the long-standing assumptions behind the London and New York systems are being tested, raising the odds of deeper backwardation and a potential revaluation of real metal. Subscribe now for more global insights and analysis.